Hello students, welcome to my YouTube channel Sun Academy. Today in this lecture we are going to solve a question of accounts of business purchase in financial accounts for FI BCom. As you can see, the given question is the balance sheet of Ram and Shyam on 31st March 21 is as under. On liability side, capital of Ram and Shyam is given 2 crore, total 4 crore, profit and loss count 2 crore 50 lakh, creditors 2 crore, provident fund 15 lakh, workers profit sharing fund is 40 lakh. On asset side, fixed assets of 5 crore, debtor 2 crore 50 lakh, stock 1 crore 5 lakh, cash 50 lakh, total both side 9 crore 5 lakh. And it has been said that on the date Surya Limited was established with the terms as all assets and liabilities will be taken except debtors and creditors. Fixed assets at 20% more and goodwill of rupees 50 lakh will be paid or to be given. Company will issue equity shares of rupees 100 each at 150. Company will collect and pay at 3% commission. Pass entries and prepare balance sheet. Now students, first of all, net assets will be found out because payment is to be given in form of equity shares. So what will be the purchase consideration? That will be net assets. So first we will take assets. For that, fixed assets are of 5 crore. That are to be given 20% more. So 1 crore will be added. And that will be 6 crore. Then after stock, that is 1 crore 5 lakh, cash, that is 50 lakh, and goodwill is company itself paying to the company, and that is 50 lakh. So these will be total assets, fixed, inventory and cash. 6, 7, 8 crore. 5 lakh will be the value of total assets. Now from this we will subtract liabilities. Now liabilities includes provident fund, ₹15 lakh, and workers profit sharing fund, that is 40 lakh. So total liabilities will be 55 lakh. Now 5 lakh 0 out of 8 lakh. If you subtract 50 lakh, so net assets will remain 7 crore 50 lakh, that is net assets, and that is equal to purchase consideration. As you can see here, company is paying particularly by equity shares, so this method is net asset method. Now payment, So 7 crore 50 lakh will be divided by 150. So 5 lakh equity share capital will be 5 lakh into 100, that will be 5 crore, and securities premium will be 5 lakh into 50, 2 crore 50 lakh. So this is the payment of purchase consideration, how company will pay to Ram and Shyam. Now if we start to write journal, assets will be debited, liability will be credited, and difference will be credited to Ram and Shyam. So fixed assets account debit will be 6 crore. Stock account debit 1 crore, 5 lakh. Cash account debit 50 lakh. Goodwill account debit 50 lakh. To provident fund account 15 lakh. To workers profit sharing fund account 40 lakh. And to Ram Shyam account 7 crore 50 lakh, being assets and liabilities of vendor taken. Now Ram and Shyam account will be debited and what was paid to them will be credited. So Ram Shyam's account debit 7 crore 50 lakh to equity share capital account 5 crore, to securities premium account 2 crore, $50 lakh, being purchase consideration paid to vendor. Now debtors and creditors are not taken, so their entry will be passed. Debtors of 2 crore 50 lakh, vendors debtors account debit 2 crore 50 lakh, to vendors creditors account 2 crore, to vendor suspense account 50 lakh, being vendors debtors and creditors taken for payment and collection. Now Debtors has paid full amount, nothing has been said that they deducted. So bank account debit 2 crore 50 lakh to vendors debtors account 2 crore 50 lakh being paid by debtors. Then after creditors will be paid, creditors are of 2 crore. So vendors creditors account debit 2 crore to bank account being paid to creditors. Now let's clear the space for further. Now 2 crore 50 lakh were collected and 2 crore were paid. That remains only 50 lakh. 3% commission is to be calculated. So on 4 crore 50 lakh, 3% will be 13 lakh 50,000. So vendor suspense account will be debited 50 lakh to commission account 13 lakh 50,000. How commission is calculated on 4 crore 50 lakh 3% on 4 crore 50 lakh, that is 13 lakh 50,000. Collected 2 crore 50 lakh, paid 2 crore, it remains balance 50 lakh, out of which 13 lakh 50,000 is to be taken as commission. So to bank account 36 lakh 50,000 will be paid to vendor being paid to vendor after commission. Now company will write off the goodwill against commission. So commission account debit 13 lakh 50,000 to goodwill account paying goodwill written off against commission. Now here completes the journal. If we come to cash account, 50 lakh was cash of Ram and Shyam. Commission came 13 lakh 50,000 and nothing was other entry. So by balance CD will be 63 lakh 50,000. Now, if we come to balance sheet, share capital will be which was issued to 5 crore. Under reserve and surplus is 2 crore 50 lakh securities premium. Current liabilities, that was provident fund and workers profit sharing fund 40 lakh plus 55 lakh. Workers profit sharing fund 40 lakh and other is provident fund 15 lakh. So total of the balance sheet will be 7 crore 50 lakh plus 55 lakh, that is 8 crore 5 lakh. Share capital, that was 5 lakh equity shares of rupees 100 each. ₹5 crore, that is to be written in the notes, given to vendor other than cash. Now under tangible fixed assets or non-current assets, that were fixed assets 6 crore. So 6 crore. Goodwill was paid 50 lakh, out of which 13 lakh 50,000. So 36 lakh 50,000 is goodwill. Then after we come to current assets, that included stock, inventory 1 crore, 5 lakh and cash equivalent 63 lakh 50,000. Now if I tally the total of assets is 6 crore plus 36 lakh 50,000 plus 1 crore 5 lakh plus 63 lakh 50,000 8 crore 5 lakh. In this way balance sheet will also be tallied. First asset, out of that liabilities were subtracted and we got net assets, which was equal to purchase consideration, and that was 7 crore 50 lakh, and it was paid as 5 crore equity share capital and 2 crore 50 lakh securities premium, because 7 crore 50 lakhs were to be paid as equity share of 100 each at 150. So 7 crore 50 lakh were divided with 150, which gave us that 5 lakh equity shares are to be paid. So 5 lakh into 100, 5 crore was equity share capital and 5 lakh into 52 crore 50 lakh was securities premium. Then after journal was written, assets were debited, liabilities were credited and difference was credited to Ram and Shyam. Ram and Shyam's account was debited and equity share capital and securities premium were credited. Then after collection was made from debtors which was 2 crore 50 lakh and payment was done to creditor 2 crore. On total 4 crore 50 lakh 3% commission was calculated 13 lakh 50,000. So 2 crore 50 lakh collection, 2 crore payment. Balance remained 50 lakh, out of which 13 lakh 50,000 was commission. So remaining 36 lakh 50,000 was paid to vendor. At last, goodwill was written off against commission. Then after we prepared cash account 50 lakh of Ram and Shyam and 13 lakh 50,000 as a commission. So total 63 lakh 50,000 was the closing balance of cash account. Now we prepared the balance sheet. 5 crore equity share capital, 2 crore securities premium. Then after current liabilities which included 40 lakh of workman profit sharing fund and 15 lakh of provident fund. If we came to asset, 6 crore of fixed assets, 1 crore 5 lakh of inventories and at goodwill which was written off, so out of 50 lakh 13 lakh 50,000 was written off, remaining balance was 36 lakh 50,000 and at last cash balance was also added and in this way balance sheet was tallied. Now still you are not following us, do follow, and if you want to learn more hard sum of this chapter, continue with us.